Hello and welcome to The Bottom Line here on TVP World. This is where we unpack some of the main business and economic stories of the day. I'm your host, Marie Cato. It's an exciting week for Poland's multinational energy corporation, Orlen. It is now officially valued at 100 billion złoty, close to $30 billion US dollars, becoming only the third company in Poland's history to break that three-digit record and boosting the Warsaw Stock Exchange. Jan Kennedy tells us more about what it means for Poland's blue chip basket.
Poland's biggest energy company, Orlen, has just achieved a historic milestone. After this year's impressive stock market rally, for the first time ever, the energy giant has reached a market valuation of 100 billion złoty, or almost 24 billion euros. Company chairman Ireneusz Fonfara celebrated the achievement in a post on X.
Orlen has become the most valuable energy company in the history of the Warsaw Stock Exchange. No energy company has ever been worth that much.
It is also the 124th most valuable company in Europe, ahead of the Italian Post and French wine and spirits producer Pernod Ricard. Orlen's core business includes oil refining, fuel sales, as well as the import and sale of natural gas. Recently, the company has also expanded into offshore wind generation. Since the start of the year, Orlen's share price has skyrocketed 75%. But Orlen's impressive performance is part of a wider trend. The entire Warsaw market has surged, with several firms posting double-digit gains. WSE's VIG20 index, comprising of the 20 most valuable companies, has grown by a third this year, rising to the highest level in more than a decade. So what's behind the rally? One key reason is a surge of foreign investment.
Last year, our stock exchange wasn't particularly well valued or well represented in investors' portfolios. And I'm not talking primarily about local investors. I mean the foreign ones, who play a significant role on our market.
The interest is growing now, with Poland set to expand by 4% this year, the highest level in the EU.
So now we are benefiting from something that didn't happen last year. Partially the growth just was relocated to the beginning of this year. Also from the perspective of the investment cycle that is really filling up our GDP growth, this investment cycle accelerates, actually now is accelerating and supporting our economy.
Given Poland's strong reliance on foreign trade, the rebound in Germany, Europe's largest economy and Poland's key trading partner, has played a crucial role in driving the recent surge.
When our main partners, particularly Germany, were going through stagnation or even recession, with few new orders, it inevitably affected us. Now that things appear to be improving, this renewed optimism is drawing more investor interest to our companies and pushing valuations higher.
In the first quarter, Orlen's sales amounted to 17 billion euros, 1 billion of which was profit, a 54% increase on 2024.
Now that Orlen has taken that leap forward in its valuation, further affirming the Warsaw Stock Exchange and its rally, we want to find out what it means for the overall development of Poland's capital market and what the future holds for Warsaw Stock Exchange. To tell us more, we are joined by Ignacy Morawski, Chief Economist and Deputy Editor-in-Chief at Polish business daily Puls Biznesu. Hello and thank you for joining us.
Hello. Hello.
I want to begin with the fact that only back in 2024, Orlen was one of the worst performing companies on the VIG20, a sub-index of the biggest businesses on the Warsaw Stock Exchange, losing almost 23% in the space of 12 months. And now it breaks an elite record value of 100 billion złoty, gaining almost 83% this year. Can you tell us about how this U-turn has come to be?
Many factors. I would mention three. One is general sentiment. It improved. The general sentiment of foreign investors towards Polish stock market. The sentiment was very bad in the second half of 2024 due to geopolitical considerations and the widespread fear that Donald Trump's presidency would mean more risk in Central Europe. Maybe due to withdrawal of United States from NATO. In the end, we know that US is still committed. It is still here. There American soldiers in the region. And Donald Trump is still committed to staying in NATO. So this whole geopolitical risk is gone. And that's the first reason. Then, talking about the sentiment, clearly in the first half of 2025, global investors move their capital to emerging markets, and especially to Poland, due to low valuations. So valuations of companies on the Polish stock market were very low half a year ago. And sophisticated international investors used that fact to increase the holdings of Polish companies. So this is one general reason. Improvement in sentiment. Polish stock market index is one of the best performing in this year, has been one of the best performing indices globally in the first half of the year. Then there are factors related to Orlen as a group. One of them is our economic environment. So margins in the gas sector are very lucrative and improve financial results of manufacturers. So general economic conditions and refining margins, this is the second group of reasons. And the third, very important, is generally positive approach of investors to the management. So the management is viewed as transparent, effective, predictable, responsible, and in this aspect, it is viewed differently than the previous management, which was viewed as which was considered as politically engaged. So there are a couple of factors, but those three that I mentioned seem to be the most important.
Do you think that Orlen stock still has the capacity to increase in value? I'd like to bring up a visual here. Here we see the stock has performed for the past 20 years. It reached a historic maximum in 2017. Or do you think that it has actually reached a historic height and it won't go up in value anymore? What are your thoughts?
Well, I wouldn't like to engage in stock market predictions. It's too tough. Generally speaking, Polish market has potential to grow. Valuations are still more attractive than in typical emerging markets. So if we look at indicators like price to earnings or price to book value of general market in Warsaw, the valuations are still lower than in average emerging market. So, and we have to add the fact that in macroeconomic terms, Polish economy is still performing well, right? It's growing. Its growth rate is higher than EU average. It's resilient. So I think that there are perspectives to be invested in the stock market, but I wouldn't like to predict whether Orlen stock price will be higher or lower over the next year.
Well, other energy companies have also been enjoying increased investors' interest this year on the stock exchange. Do you think that Orlen is simply riding that wave, or is there something more substantial? Because the company is definitely directing its attention to its offshore business, which is going to be heavily subsidized by the government.
Well, Orlen is in the commodity business, heavy regulated commodity business. It's not so most companies in this sector are to some extent similar to each other, right? So, for example, if you take the quotations of Orlen and BP, British Petroleum, you can see that they are highly correlated. However, they do not go one to one, right? It's not perfect correlation. So there are some factors related not to the general market and economic environment, but to specific features of the company. And as I said, some reasons for the stock market growth of Orlen are related to general market conditions, and they also cause other energy companies to gain in these global stock markets. But other reasons are related particularly to Orlen. And I mean the good management, predictable management. One of the important things is that Orlen, to some extent, withdrew from very costly and inefficient large investments in certain petrochemical sectors, right? So Orlen was spending huge amounts of money on investments which were to some extent politically motivated. And well, it did not cancel those projects, but it limited them. And it allows the company to generate more cash and direct this cash to more productive and predictable investments. So certainly Orlen is a well-managed company. However, there is a huge challenge over the next 5 to 10 years of energy transformation. So Orlen is investing huge amounts of money, for example, in the wind farms on the Baltic Sea. These are costly investments, and we will see how it plays out.
So there's a lot of potential, but it needs to be well managed. I wanted to move on and put Orlen's success into a wider European context. 24 billion euros, obviously a huge amount of money, but it only secures a position at the start of the second 100 of Europe's biggest companies. Orlen is sandwiched by Nokia and Saab on the more valuable side, and then Italian Post and Pernod Ricard on the less valuable end. The question is, what does Poland actually need to do to boast more companies like this? And for the record, there are 3 more Polish companies on this list. PKO BP, a state-owned bank, at 128, a retail chain Dino at position 199, and PZU, a state-owned insurer, at the 200th place. So how do we get more Polish companies on this list?
Well, there is only one way, to be patient. It takes time. It takes time. Poland is a relatively young market economy. It has a relatively young stock market. So I don't think there is any way to artificially increase the number of very large companies. I am certainly against very large mergers and acquisitions among state-owned companies. So some people are convinced that if we merge all big state-owned companies in each sector, we will gain something in economic terms. I'm against this kind of thinking. And to be honest, I think that some historical takeovers by Orlen were wrong, right? So my view is that having extremely large companies is not a big benefit to the economy. So if you look at the list that you demonstrated, the list of the most valuable European companies, you see many brands from countries which do not represent economic success, at least not nowadays. Countries like Italy or France or Spain. So these are economies that have been stagnating for the last 20 years, especially Italy. But they still have many very large brands because they sort of inherited them from the past, from the era when they were successful countries. But I don't think that we pay too much attention to the list of valuable companies. Obviously, it's like people would like to see local brands to be high on the international list, but it has little to do with economic success. We have to be patient. We have to wait until Polish local private companies grow. Dino is a good example. Dino, the retail chain, because this is a private Polish company. Like, it's a grassroots growth story. And I would like to see those kind of companies to grow. not only state-owned behemoths and huge corporations in regulated sectors, but dynamic private local companies. This should be the aim of economic policy.
Excellent point. I want to now take a look at Orlen versus the biggest energy companies in the world. On this list, the Polish champion is only in 82nd place, far behind Shell, BP, Equinor, even Italian Eni. What is the missing piece in your opinion? Does Poland need its own extraction operations? Because all the other major companies seem to be more advanced on this front, and Orlen simply has nowhere to drill in Poland.
Well, the companies that you mentioned, drill, manufacture, sell oil and gas globally. These are global companies. They have operations on many continents. Whereas Orlen is mainly concentrated in Poland and Central Europe. Right? It has drilling and extracting operations in Norway. And this is very important for Polish energy security, that we have our own sources of gas. However, Orlen is not a global company. And I don't see any negative phenomenon here. When you talk about Shell is a corporation that comes from countries that were free market economies for hundreds of years. They were the dominant global economies for hundreds of years. The companies from those countries operated globally for decades, if not hundreds of years. So it's really difficult to compare corporation from Poland, which started market economy 30 years ago, to companies from countries which dominated global economy since the Industrial Revolution.
Some people, just as we wrap up, we interviewed for this show, have suggested that the Warsaw Stock Exchange's performance has been mainly fueled by the stable economic outlook that Poland has. But the outlook has actually been more or less stable for the past 20 years since Poland's accession to the EU. So other people suggest that the capital is looking for new havens now that the economic situation has soured in some other parts of the world, and investors are limiting exposure to some asset classes in the US, for example. Which trend would you consider to be stronger?
Well, I would advise everyone to look at long-term trends, not pay too much attention to short-term noise, to those stories that are told by analysts only to draw attention. If we look at Polish stock market from the long-term perspective, let's say last 5 years. Well, 5 years is maybe not long-term, but it's longer than 1 year. Then the performance of Polish index is very similar to global index. If we take MSCI is a company that constructs indices, so we can compare various indices between countries, continents, sectors. If we take MSCI Poland, so the index of Polish companies, and we compare it to MSCI World, obviously currency adjusted, right, in dollar terms, then the performance of Polish index over the last 4 or 5 years is very similar to global stock markets. No big difference. Then there are periods when certain markets underperform or overperform. 2024 was really poor for Polish market, right? As I said, due to geopolitical considerations, political risks, and some various other factors, Polish market underperformed. Now, this year, we have a reversion of the trend. So we are sort of recovering from the bad period of last year. But in the long term, I don't see big differences. I would say even more. Maybe Polish stock market was valued undervalued for many, many years due to political risks and due to high share of state-owned enterprises on the stock market and due to the lack of local liquid capital. And maybe now it's sort of gaining ground, gaining attraction among international investors who are looking to diversify from the US stock market, right? Because the dollar is depreciating. Americans say that they do not want as many foreign investments on their market as they used to have. So global capital is looking for new sources of or new places to invest, and maybe that may be some factor behind the good performance of Warsaw Stock Index. But I don't think like it's critical. It's just a long-term trend.
Okay, Ignacy Morawski, Chief Economist and Deputy Editor-in-Chief at Polish business daily Puls Biznesu. Thank you so much for your insight.
Thank you very much. Thank you.
And that concludes the bottom line for today. I was your host, Marie Cato. We bring you the best of regional business Monday to Friday at 5:10 CET on TVP World. And in the meantime, for the latest in regional business, follow us on X and on tvpworld.com. Goodbye.